Assalamualaikum and hello everyone. Welcome to my channel. Today we are going to learn on how to prepare financial statements, namely the statement of profit or loss and other comprehensive income, the statement of changes in equity, the statement of financial position, together with the notes to the financial statement, particularly the notes on PPE. And this presentation is regarding a company, which is regarding a limited company. And our limited company in this scenario is Blooming, which is the name of the company, Blooming Berhad, which is limited in English. Berhad is limited. And the year end that we are concerned now is as at 31st of December 2017. And you are given the balances, maybe from the trial balance of the books of Blooming as at 31st of December. All the debit items by right should be asset and the expenses, right? Whereas the credit item should be the liabilities and equity as well as income, right? With the exception to items like accumulated depreciation, which is a negative asset account. That is why it is put on the credit side. Okay, so if you look at the statement of all the trial balance here, you have the trial balance, right? So at the bottom there, you have the additional information that we are going to go and investigate the information to prepare our financial statement. We're going to go through one by one, and they are all together 6 information, actually 9, around 9, right? Because in this 6 there are 3 information under the information number 6. So what are you required to do? You are required to prepare the financial statement, which is in accordance with Mfrs 101, presentation of financial statement, which is actually equivalent to IAS 1 in the international standards. And you're asked to also prepare the statement of profit or loss and other comprehensive income for the year ended 31st of December 2017, that I will call SOPL. Statement of changes in equity for the year end, the same year end, which will show the movement of the equity, share capital and reserve, and the statement of financial position as at 31st of December, showing the assets, liabilities, and equity, and to prepare notes to the account for the property, plant, and equipment, and that is in accordance with Mfrs 116, right? So before you start, the best thing to do is always to go and do the classification, and I've already done the classification for you, to cut short the time. So first, what you need to do is to go and check which statement will it be going to. So if you look at what I've done here, right, you will see that, right, I've already classified that, and in the second column here, which is column C, you also have the sub-classification of it, right? So I'm going to zoom it for you. Yes, you can see it here now. So I've already done the classification. Once you have done the classification, your task would be much easier to prepare the financial statement, right? So what you should do now, after you have identified that the year end is at 31st of December, what you can do is to draw your template. When I say draw the template, it means you should draw the template that is required, or the statement that is required at the bottom here. Draw the template for the, or prepare the template for the SOPL, statement of profit or loss and other comprehensive income. Put all the pro forma item, prepare the statement of changes in equity, and prepare a statement of financial position, and also show the pro forma notes to the account. Do not put the number yet, just put the item, okay? After you have done that, what you can do is, I've already prepared that, I'm going to show you in a short while. What you'll do is you are going to go and transfer all those balances which are relevant to the statement of financial position, where possible, to the statement of profit or loss, if that is just to get some free marks, right? And also to the statement of changes in equity. For example, your non-current asset here, it will be transferred not directly to the statement of financial position. All the balances that you have here, you can see the balances here, right, that you have here, that one will be transferred to the notes to the PPE. Same goes to the accumulated depreciation. So this will be the balance at the beginning of the year in your cost or valuation section, And this one would be your balance at the beginning of the year for your accumulated depreciation section in your notes to the PPE. Let me show you. And I have done that already for you. Okay, you can see this, right? So I have transferred those things here. Okay, these are the figure that were transferred from the trial balance or the list of the balances accordingly. So this one will give you free marks if you're talking about final exam or any test or any assessment that you may have been tested in your study, right? Okay, the same thing should be done for your accumulated depreciation. Now you already get some marks for your PPE notes by putting the balance brought down as at 1st of January. Remember, we take this from the trial balance. The second part is this one, which is to take the accumulated depreciation that were given in the trial balance. So you just take the simple things first and put them to the correct template. So now we put that here. Don't try and do things that are quite difficult to your definition or to your point of view, but just do the simple things first. Okay, sorry about that. Okay, never mind. So next, after you have done that, you can do the rest for other items, right? I've done this, right? And every time you do it, please put a tick, as I always remind most of my students. If you put tick here, it means that you have already checked for that, right? So one is those item is there. See Daisy, let me just put it for you. Okay, I'm putting it here, and you can put this different color. Maybe you can put red, because red is always good to start with. I will put it here. Okay, here. Okay, that one. It's not trying to. Let me just do it for you. Okay, so that one you have done that. So I'll put in red, and you can. You have done this for this tree, right? Up till here. Yeah, we have done that up till the accumulated depreciation. Okay, for the account receivable, I'm not going to put it yet because I noticed at the bottom here, when I go and check the information number 6.1, there was some adjustment to account receivable. So that one I will not transfer yet. I will just leave it as it is. I will do the adjustment. Right after the adjustment, I will transfer that. Now we'll go and transfer the expenses to the working section. Right. Sorry about that. To the working section. To the working section means expenses like admin expenses, advertising expenses, interest on loan. So I will have you should have prepared the working template as well. So these expenses I already transferred here. So for example, the one here, you can check here with me. Okay, you have this. These are from admin and distribution costs that comes from the trial balance. Same goes here. These are also from the trial balance as well. And you also have your carriage hours, and you can see my column here. I put the reference as well, right? Okay, this one should just be as it is. Okay, so all this you will be able to see that these are all from the trial balance. This one from trial balance, and from the trial balance, right? So if you can color code that, why not, right? You just color code them. I use the yellow for that. So after you have done that, you can also do the same thing, which is to go and mark that to show that you have already done that to the where you should, which is admin expenses, advertising, interest on loan, carriage outwards. Okay, here there's one more, few more actually, sorry, distribution, yeah, and we go and check office salaries, right? And you also have item like rental, income as well, because rental income, for your information, these are an income and these are other income. Same goes for your sales, because in this question there are no adjustment for sales. So you can go and check that we have done this, right? So go and put that. So for the rental income, yeah, rental income is here. Okay, it is 89,600, and you will be doing that for your sales, our revenue, right? Revenue. Other income comes from rental income, right? The rest you will just leave it first, because this item like cost of sale, you prepare the template, right? And this will normally need you to do adjustment, like admin expenses as well. There will be adjustment to that, right? Meaning that adjusting entry, distribution costs as well, finance costs, right? In case there are adjustment, you need to go and check. And if there is any investment income, then taxation, all this, right? After you have done that, you can also do the same thing for your, you can do the same for your equity. You can see that there are item equity here, right? So the item equity, the same thing. You go and transfer that. This one, it will be transferred to the statement of changes in equity, the interim dividend, but we'll be doing it later because it will have some adjustment. I will start with the one that is without that many adjustment, which is preference share capital. So we copy this from here and put it here. Okay, and these are the items that will go to the statement of changes in equity, right? This will also go to the statement of changes in equity. Which one? I'm referring to the orange share capital, right? Retain earnings as well. Okay, after you have done that, you will be doing that. You will be doing that. You have done for sale just now. You should do also for your accounts payable, for your non-current liabilities, the bank loan. Just do simple things first, the one that have no adjustment, right? So if you check the question, I believe you have checked the question. Those are without adjustment. Do not do things for tax yet. Do not go and transfer the allowance yet, because this one will need you to make some adjustment. Same goes for inventories, because we need to go and see the valuation of inventories. Dividend also, we just KIV for a while, because we will have to check if there are any dividend payable. Sorry about that. So this one, yes, intangible asset, there is no changes perhaps, so you can just transfer that. Cash, you don't have to do that yet, because cash normally will have some changes because of the payment that were made during the year. Okay, that one will be transferred accordingly to all your items. So let's look at your statement of changes in equity, where I've done that for you. At the bottom here, these are the items that you have in the statement of changes, and the total is what you have here, which is 35,240. So you should have a column for total as well. This is your statement of changes in equity, right? You can go and transfer things to your intangible asset, right? Items, intangible asset. You can transfer your bank loan from the trial balance. These are all free marks for your information. Your accounts payable as well. So this will ensure that you will get, some good marks to start with, even without doing any adjustment. That was just some tips from me. After you have done all that, you can now go through your adjustment. So you remember to always come with your template first, a template for working as well, right? And I have put also some adjusting entries at the bottom there. So we'll go on looking at the adjusting entry. Adjusting entry number 1 in the additional information is about the land that was revalued to the fair value. So this company decided to incorporate this value into the account, so it shows that the company used revaluation model. So when that happened, you have the fair value, right? The fair value was 19,065 million, and you need to compare with the carrying value. Carrying value, this is regarding information number 1, which is related to revaluation. So freehold land is being debited. How much? By the difference between the fair value and the carrying value. Remember, freehold land is not depreciated because they are not a depreciable asset, right? Right, so you will do that. 496 is the difference between fair value and the carrying value. Should you see that fair value is less than the carrying value, that will be a deficit, and you are going to go and debit them to the statement of profit or loss. You will debit that as a deficit, and that will be credited to the freehold land. But this is not the case here. So when you do that, you need to understand that this one will give effect to your notes on PPE. The valuation of PPE will now be at the fair value or the revalued amount. So this also needs to be adjusted in the PPE note, in the SOPL, and also in the statement of changes in equity. Let us look at that part straight away. So that we can always do this concurrently, meaning that do the working and straight away show the effect to your statement. So the first effect is here, surplus. Okay, 496, because we debit, and that is part of other comprehensive income. We debit to our freehold land, we credit to our asset revaluation reserve. So, and that will also affect our asset revaluation reserve. We will be added this item, surplus. Okay. Next is that it will also have to be reflected in the notes to the PPE under the valuation of PPE, since this is done under revaluation model. Okay, that has to be added to the cost of valuation section with the surplus. So now there are no acquisition in this question, there are no deficit. I just put here in case you need to check for that. In this question, it will only involve disposal and revaluation, right? That is the first one. Next is adjustment number, additional information number 2. Okay, additional information number 2 is on depreciation. Make sure you revise your knowledge on depreciation from your previous maybe Mfrs 116 knowledge. And these are to be depreciated on reducing balance method. That is for the item motor van, and it is to be treated as distribution expenses. So when you calculate depreciation, make sure that it's under distribution expenses. For building and machinery, they will be depreciated at 2% and 10% per annum, and it will be on straight line method. Straight line method means either you use the estimated useful life, or you take the percentage based on cost. And when I say cost here, it should be cost after you deduct the residual value, or what you call depreciable costs. And all depreciation expenses were charged on yearly basis. So you can calculate your depreciation here. You have already calculated the depreciation here, right? Your depreciation here. One more here. So this is easy for you because this is for building. So 2%, 300 from 15,760 is the cost. 2% is the rate, 1 year because yearly basis. And I will now do for C. I number it as C for motor vehicle, because motor vehicle is reducing balance method. I'm not going to do on plant and machinery first. I will KIV that because I will do it later after I have done additional information number 3. Okay. For motor vehicle, that was on reducing balance method. So you take the cost. The cost is the cost that you have already been given in the tri-balance, right? Accumulated depreciation is the one at given in the tri-balance as well. So multiply by 15%, multiply by 1 year, because there are no changes to the motor vehicle. And that will give you 67,200. Okay, you cannot calculate the depreciation for plant machinery yet because there are some adjustment in number 3. So when you do this for your item motor vehicle and for your item building, it should be put in your working section here. Okay, and here. Yep. This one we have not found the detail yet. Oh, sorry. Not so fast, right? Next is to look at information number 3, because I say information number 3 is relevant to calculate the depreciation. Okay. Number 3 is on 30th of December 2017, a machine was sold. So there was a derecognition and it was sold at a loss. So when there is a loss, you should know what is the journal entry. This one will be debited to the profit or loss, and it will be credited to the machine account, or you can also credit to the disposal. But here I credit to the machine account, if you will check later. The cost of the machine was 80,000. So this was from your derecognition knowledge under Mfrs or IAS 16. So the cost has to be removed. The accumulated depreciation related to the asset that were derecognized must be removed. And this 80,000 must be removed or eliminated. So you will need to go and credit the machine account. And the net carrying value at the date of disposal was 24,000. So you need to go and find out what is the disposal proceed. If the net carrying value, if you see there is a loss, you will now get the proceed already by taking net carrying value 24,000 minus loss 4,000. You'll get the proceed. However, if this is a gain, you will take the net carrying value as given and you will add 4,000 if this is a gain on disposal. But in our case, it is a loss. This was not yet recorded. Let us record that. And I've done the recording here for you. You can check the information tree here. This was done on 30th of December, sorry. Okay. So for the loss, it will be debited to the SOPL. How much? Right? Is 4,000. Where do I get 4,000? From the information. And for the motor vehicle, the cost that was disposed, it will be credited. Now you can see that I put 80,000. This must be at the cost disposed. So it should be at the cost disposed, right? Cost disposed. We just highlight this. Okay. Cost disposed 80,000. And as I said just now, to find the cash proceed, you will take the carrying value, because in this question you are giving the carrying value. If you are not given the carrying value, you have to find the carrying value. How? Take the cost disposed minus the accumulated depreciation. But in this question, you are given the carrying value 24,000. If there is a loss, you deduct the loss, you'll get the item, which is your proceed, 20,000. And this will be debited to the bank account and credited to the motor vehicle. Remember to go and add this to your bank account in your statement of financial position. And your loss should be included under your admin expenses, 4,000. And the difference between the cost disposed minus the proceed minus the loss, this will give you the accumulated depreciation that you will have to eliminate. Eliminate means you are going to remove this in your accumulated depreciation account, because the asset now has been disposed. You cannot just close the asset at cost, but the accumulated depreciation related to the disposed asset must also be removed as the way you eliminate or remove for your motor vehicle. So the one that is being disposed only. So with this, you can see that I put some remarks here. So this one have to be be adjusted in the current asset section in the statement of financial position. This one should be adjusted in the admin expenses, and this has to be adjusted. This one has to be adjusted in the notes on valuation, and this part will need to be adjusted in your notes on PPE. So let's see this in your SOPL first. So if you do this, you will see that in your statement of profit or loss, before you do that, you need to go and include the loss here. So the loss will be here, 4,000. Debit, statement of profit or loss under admin expenses, right? And the same thing for the cost. For the proceed, it should have been adjusted in your cash at bank. So you can see here, your cash at bank, you have this one is 20,000 actually, right? 20,000. Okay. You should have adjusted this by deducting that proceed from the bank balance given. So if you can check the bank balance again, bank balance, where is it? Let me check. Where is it? Okay, your bank balance would be given here, cash at bank 5.104 million, right? So that should be adjusted. So now we have already adjusted this, so we are done with this, right? Now, so go and adjust that in your bank. Adjust that in your bank account. Okay, when you have done that, that's the only adjustment actually for your information. So we can now reveal the amount, which is 5,120,040 for your bank balance. Okay, one more thing that you need to do is you need to remove that, as I said, in your plant and machinery. Why? Because the item has been disposed. So the 80,000 must be removed at cost. It must be removed, right? And together with the elimination of the accumulated depreciation, 56,000. 56,000. Okay, that was for your item that is being disposed, which is your plant and machinery, right? Okay, for this there are no adjustment. For your information, your freehold land, because freehold land is not a depreciable asset, and at this time you can, by now you know what is the amount, which is going to be the same as per the valuation figure 19,065. Okay, next is to look at the effect on current year depreciation. The effect on current year depreciation for your disposal. For the depreciation, this is the journal entry, right? I'm going to reveal this for you, the journal entry, right? This is the journal entry for the depreciation. And let us look and go and focus on the plant and machinery that were being disposed. So before the disposal, the existing plant and machinery at cost was 3.712 million. And the costs that were disposed as per information number 3 were 80,000. So if you take out that amount from the balances given, you'll get 3632. So you will not charge depreciation anymore for the asset that are being disposed, because this company adopt yearly basis. So for yearly basis, there is no depreciation in the year of disposal. So for the 80,000 that is being disposed, there will be no depreciation. So that's why it is being removed from the existing balances at cost 3712. So here you have 3632, which is after the removal of the cost being disposed. So you take 3632 times 10% times 1 year, because yearly basis. So that one will give you 363,200, which is the depreciation for plant and machinery. And this is the journal entry here. You can see the journal entry here in this purple ink here, right? Okay, so that will all be included in the working section here. Yep, it will be included here, 363,200, right? So you are almost done with the working for expenses. As actually for your distribution cost, you are done already, 502,560, right? You're just trying to find another working for your admin, right? Next, let's look at the third one. Sorry, number 5. Number 4. Number 4 is on dividend. Yep. Number 4 is on dividend. For your information, sorry, number 4 is not on dividend. It was on transfer to reserve. During the current year, 31st of December 2017, directors declared a transfer to general reserve. When you transfer to general reserve, the transfer is made from the retained profit. And the amount that is being transferred from the retained profit to the general reserve is 62,000. So you are going to debit the general reserve. You can see here, information 4, I put the journal entry here. The general reserve 62,000 to be credited because the reserve got the transfer from the retained profit, and this will be added to the statement of changes in equity under general reserve column, and the retained profit will have to be deducted with the transfer being made to the general reserve 62,000. So this will affect your statement of changes in equity, and by doing that as well, you already have done your checking actually for your general reserve, right? So let's look at the detail of that in your statement of changes in equity to see the effect of that transfer. So I create one column here for the general reserve. Earlier I put the balances, remember the balances as per the trial balance. For the surplus, for the profit for the year, will not reveal yet, we have done that. So for the general reserve, you can see that the effect would be on the retained profit, you will deduct, but in the column general reserve, you are going to let me just do this for you. Okay, so the general reserve is 62. So 62 removed from the retained profit, and 62 will have to be transferred to general reserve. So at the end, there were no effect in your total from the transfer being made because those are zero, right? So that was for the transfer to general reserve. So I will continue with the rest of the discussion of the question in our next video. So this is video part 1. Thank you for watching, and catch me later in my next video discussing the rest of the adjustment, which is adjustment 5 and 6, right? I'll see you when I will see you. Assalamu alaikum and have a good day ahead.